Have you ever felt like you're stuck in a trading rut, struggling to make sense of the chaos in the markets? The truth is, volatility is the lifeblood of any market, and the key to profiting from it lies in understanding how to trade with the right strategy. In today's video, we're going to dive into the Bollinger Band strategy, one of the most popular and effective ways to trade volatility. Developed by John Bollinger in the 1980s, this strategy uses a combination of moving averages and standard deviations to gauge market volatility. The basic idea is to identify periods of high and low volatility and then trade accordingly. Sounds simple, but the key to success lies in the specific parameters and rules we'll be discussing. So, let's start with the basics. A Bollinger Bands chart consists of three key components: a 20-period moving average, two standard deviation bands, and a 50-period moving average. The 20-period moving average is used as the central line, while the two standard deviation